Well, we've recently begun our 18th year on television, and during that time, one of our favorite guests has always been Roger Schlesinger, the Mortgage Minute guy. He hasn't been on for a while, but Roger, good to see you.
Good to see you. Who told you to move?
Well, here we are on Wall Street now.
Yeah, I
But
understand.
what is going on these days in the mortgage market? I mean, there's so much going on, or I should say not going on in Washington, but how's that affecting the mortgage markets?
Well, it's really been a plus for the mortgage markets, but as people know, we shoot this on Thursday, and today there's a rumor going out that there's going to be a short-term settlement. So the stock market is rallying, the bond market is selling off, and we're starting to lose these great rates. Mm-hmm. We're only up an eighth so far, and I don't know what's going to happen. And by the weekend or whenever you're watching this, you're going to find you'll know more than I know right now. But we have come all the way down that we actually had a print yesterday of a 3.99 30-year fixed and a 2.99 15-year fixed. Now, those aren't without points. There's a point or so on each one of those, but if somebody wanted to have that print, wanted to have that so they could go to a cocktail party and say, look, I got a 299, we could do it. It's backed up an eighth. Without points, we're about the middle fours. With the 30-year, we're about the middle threes with the 15-year. But what we really have that's good is jumbo rates. Jumbo arms. All the banks have come out with amazing jumbo arms, starting with high twos on a 5-year arm up to $2 million without points.
My gosh.
Yeah, now I don't know that it's there now. I haven't seen it, today. We're in the low threes on a 7-year. It jumps to the low fours on a 10-year. But these are terrific rates up to $2 million.
Now, I mean, we don't think that anything is going to be solved permanently in the short term in Washington, but I noticed that, when the Fed had come out and they reiterated again this week that there's not going to be any tapering off of their purchases of bonds and other purchasable assets, that kind of calmed the mortgage markets for the time being, didn't it?
Yeah, we got the 10-year to drop all the way down to 2.60 on the 10-year note. We needed to get to 2.50. We would have been at the 30-year lows or the all-time lows, but it didn't get there. And this morning, the last I saw it was at 2.7, so it's up a bit. Not that bad yet, but if they settle this thing, it's going to be gone for at least 3-4 months. They'll take it back right up there, and we'll be fighting the rates for at least 3-4 months to see then what happens to the economy.
So when people are looking to refinance or they're looking to purchase, I mean, I know right now that in many pockets of the country, real estate prices are escalating because inventory is down. So it's supply and demand. But this is really probably one of the better times that you've seen in recent memory to be looking around for a mortgage rate.
Well, there's another reason for that. The feds are trying to get out of the mortgage industry, and I couldn't applaud that more. However, they're doing it the wrong way. What a surprise. And they're really going to hurt us starting now, especially next year. And I'll give you the three things. Number one, they came up with this ATR QM. That's the ability to repay the qualitative mortgage. And if you get this mortgage, they have to say that you've passed 8 different checkpoints and you have it. If you lose your house during that period of time, you can use this law against the lender and say, I wasn't obviously a QM candidate here, and if the lender loses, he has to pay all your legal fees, 3 years interest, and the cost of getting into the loan. So next year, the underwriting is going to be impossible.
Right.
They say you have to have a 43% debt-to-income ratio. I don't think we'll get anything approved over 38, 39.
Well, why would any lender put somebody in that kind of a deal knowing the risks involved?
I agree, but this goes for VA, FHA, Fannie, and Freddie. Now, secondly, to add to the fun of it, every now and then they raise the conforming limits.
Right.
They're lowering them.
They're lowering.
Yeah. We're now at 417. We're either going down to 400,000 even or 392,000. And then that also brings down the jumbo conforming product as well.
Now, I just said a moment ago that real estate prices are escalating in many pockets of the country.
Right.
You would think that the conforming loans would go up to match that.
They don't want to do them.
They're going in the other direction.
Yeah, they don't want to do them. So what they're doing is they're trying to work their way out. Now that starts with any loans that fund in January. So you got to really hurry if you're between 392 and 417, because otherwise you have a jumbo.
Well, how come we just can't put you in charge of all of this?
Well, here's the thing that they should do. They continually look at the wrong things, as far as I'm concerned, when it comes to qualifying a mortgage. I think there's two things you have to learn. There's four things they talk about. They talk about tax returns, they talk about credit, they talk about loan to value, and they talk about reserves. The only two things that matter are the two things they don't care that much about: loan to value and reserves. And I believe anybody who's going in and getting something 60% or less loan to value, or is refinancing that, should automatically get it, as long as they have at least a quarter of the loan in reserves or more. Because they're not going to lose their house if they have that much equity in it. And if they have the reserves, they can weather most storms. But no, they keep looking at the tax returns, which was yesterday's news, and the credit score. Well, of course you have a good credit score when you're making money, but if they sell the company or close it down and you're not making money, there goes your credit score, there goes your tax returns, and you don't have a low loan to value, or you don't have any reserves. And that's why we're in this trouble, and they continually look the other way.
Very quickly, Roger, almost out of time. How can people get a hold of you?
866-288-0088. 866-288-0088. Or go to mortgageminuteguy.com.
Mortgage Minute Guy, Roger Schlesinger. Again, the website, mortgageminuteguy.com. Roger, thanks so much.
My pleasure, Don.